Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. Now, just to give you a heads up, tomorrow we'll be going through mastering the double top and double bottom pattern. That will be at 7 p.m. Sydney time, and on Thursday more analysis at 7 p.m. If you want to join me for those webinars, just register your interest at the webinar page. And before we get into it tonight, if you can also read through the disclaimer, if you're on our YouTube live stream, I cannot see the chat, but you can join us in the webinar by using the link I've given you. Other than that, those in the webinar, you can use the chat box or the Q&A box to talk to me. So I'll just give you a moment to read through the disclaimer. All right, we'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I've been trading now for almost 20 years in the Forex market, mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. If you want to connect with us in the week, at our website, acy.com, go to the Market News tab, or our YouTube channel at ACY Securities Australia. And if you want to connect with me personally, my links can be found on my Linktree page. Just over to there. If you want to get access to the chart layouts and templates that I'm using in MT4, then just contact Nathan.bray. His email is on screen there. I'll put it in the chat as well for everybody. Just contact Nathan. He'll be on too happy to set you up. All right, so let's get in the news items first of all. All right, so a quick synopsis. Midnight tonight and at midnight Thursday, we have Fed chair part testifying. Midday tomorrow for the New Zealand, we've got the interest rate decision. And then tomorrow afternoon, 4 p.m. for the UK, got GDP month on month to watch out for. Big drivers this week will be the CPI data and the PPI data Thursday, Friday evenings, okay, for the US. So that's at 10:30 p.m. and then 10:30 p.m. the following day. And all these US items, most, as I was just saying before, will most definitely drive the market. So just head over to forexfactor.com, set it to your time zone, and know where they're all coming out. But it's going to be difficult trading this week. For one, I'm going to be stepping aside until we have a release of data and then see where price sits. I'll have levels where I want to trade at if price can move to a level that I'm watching. But what I don't want to have the fear of is missing out, getting in, and then, you know, if the CPI data or PPI data comes out and it's totally opposite than expected, then I don't want to be on the wrong side of that. Okay. So at the moment, the US dollar, as I was saying, I'm having to use the futures contract now. You'll find that down at the bottom somewhere. Here we go. Just here. For me, I was able to join it with the old data that was in the dollar index before that dropped off. Can't do that now. So I do have a full kind of historical data going on my charts. Now, this is a range I was discussing last week. It is really from the weekly chart. This range here. So we kind of have a triple bottom here and then a lower top here. So it is a little bit mixed, a little bit range bound. We sold off down on my data anyway here to this 79% level, put in a nice little rejection yesterday. So are we, my question is, are we bottoming out here? We're kind of maybe seeing the inverse on the pairs to the US dollar. Not a given that this is going to hold, but it's just in the logical place where you expect price to bottom out. That was a weekly move up. Probably pulled back to 79 to continue the overall trend on the weekly scale. All right, so we definitely have a reversal candle. We're already up for the day. So as a reversal, we are definitely seeing a reversal of sorts. So you could, be taking that trigger on the pairs to the US dollar the opposite way. So let's get into those pairs. Well, let's just head into the S&P 500 first to see what this is doing. This is still moving up. We're at the all-time high, so it's difficult to trade when we're at the all-time high. I would wait for a pullback, support if we can see pullback. So it's difficult when we're in such a bull market. Price doesn't always want to pull back, but in my mind, do I want to buy the top of the market? No, I don't. So I drop to the 4-hour chart and start to assess. This would be the area that I would look. This area here. This is the area that I would look for a pullback to. Now, it doesn't mean to say price will do what I want. A little bit like I was discussing this area here that held. If price was to form a base here, that would be the area to watch to trade to the upside. We're kind of as well, this range of sorts here, been pretty much measured above almost. So it is due a pullback as well. So I wouldn't want to get caught at the top of the market and see price pull back to support. So I will just be monitoring for a pullback. That's last month's high as well, from last month. So that's a logical level for support if we could pull back at 55.20.89. All right. So let's have a look at these US dollar pairs. Obviously, we moved up heavily last week. This is the predominant rate. This is the high to low of last month. So what I'm seeing, that's last month's candle down. We are, at the moment, we pretty much opened up here and we've traded up inside the range of last month at the moment to about there. All right. Are we now going to trade down for the month? So, are we forming the wick so that we can now trade down to put in a candle like so? So we retrace just beyond 62%, in between 62 and 79% level here. Are we going to top out now? News volatility this week could see a spike up further. And the logical level would be up here at 79% level at 108.62. There's a bit of an imbalance in here, which you'll be able to see on the 4-hour chart. Here it is. Now, we don't have to feel the imbalance, but if we did get a volatility spike from CPI data this week, then that would be the most logical area to look and hunt. So 108.62 to 108.84, hunt, for the opportunity of a reversal. Now, we may already be reversing here. 4-hour trend still up in terms of high tops and bottoms here. So are we turning or not? The daily chart did put in a nice rejection up there. Personally, if I was wanting to get in today, maybe looking for a short with the logic that we've just retraced back up to the higher end of the range at the moment, then I would want to be looking at last week's high. We folks broke last week's high yesterday to trade down. So let's just take both sides of the market. If you're bullish still, you could be drawing a fib across this range. We're at the 62% zone, so getting a bit of a support from that high to the left. So you could just be simply looking for, if we form a swing point in this area, can you see a trend line break to the upside if you're bullish? Because we could just keep moving up all month. Or do you think maybe we've just moved up to the top of the range to then move down for the rest of the month? So which side of the market are we on? Last week's high, which was here, this is Friday's trading on the 50-minute chart. Yesterday's trading, you can see That was the spike on job figures. That was the high of Friday, last week's high. You can see that we failed there 4 times. So personally, I'd want to see if we can rally back up to there today. Now, whether we can or we can't, well, we'll have to monitor price. Could we, maybe when the Fed talks later in the day, can we get up to the 79% level up here? Start to entertain the high end of the range of yesterday, 108.38. Could we come back up to last week's high, 108.42? That would be a great area to fish for a short. Other than that, I'm just on the sidelines monitoring. With the news coming out this week, I want to try and get, if I'm looking for a short, I want to try and get as high up as I can. I'm kind of favoring the fact that we maybe just moved up to the top of the range. So that's how I'm kind of biasing my positioning if I can get short at the top of the range. All right, Euro Yen, very overrun. It's a little bit short of a major monthly high from 1992-ish area here. So it's been a fraction short. We're very high up, very expensive for the Euro Yen. I don't think the Euro was in play in 92, but this data has all been calculated taking other currencies into play and what would it kind of price it out as. So that was the theoretical price of the Euro Yen back in that time. If you're wondering how I got data for that, I haven't worked it out. It's just data that I have. Now, we can see for the last, we haven't really made any further traction. This is the 4th trading day where we potentially can't move higher. Well, the last 3 days, yesterday managed to make a fresh high, but you can see the closes. We're not closing above this close here. So we're definitely at a pause. The question is, are you prepared to try and look for a short? Really, if you're trying to look for a short, last week's high here, 174.51, up to yesterday's high would be the area to look at. All right. We have a gap here from last week. I'm inclined to think that we'll come down and fill that gap at some point. So that would, in my mind, favor the idea that, well, if you can see a nice tight structural setup, lower time frame to get short, then we could be seeing a failure up here to at least move down to last month's high, 172.43. Okay, this area where we gapped at the start of the month. Now on the buy side, you can see here in New York, we're getting support at 174. We've been a fraction short of that today and got support. So this is where the buyers are. If the buyers are in control and you want to get long, this is the area or close to that you want to be watching at the moment. And I just want to draw a fib from that high to low. There's last week's high that I was discussing, 174.51 down to 174.47. That's where I'd look for the market to fail. It's opposite this area from Friday. I would look at those that would be buy and sell zones at the moment. As well, if we broke this area and came down to test the low of yesterday, 173.50, that price would be stretched at that point. We would have done the range for the day by that point. So down there as well, we could see then a pullback within the range at 173.50. Okay, Euro pound, downtrend, failed in the zone that I highlighted a few weeks ago. Slower top, lower bottom. We're probably looking for a rally within this range at the moment. Just the 4-hour chart. Bit of an imbalance in here. So I would look at, can price come up to this 84.64 area? And then does it start to want to turn over intraday? We can see at the moment it's holding at the 62, but I would favor up here as an area to watch for a short if we could get up there. All right, pound dollar. Now, it's been all steam right back up the top of the range. So that was last month's high to last month's low. So the same commentary that I said on euro dollar. We're just trading back inside the range of last month. So that was, yes, last week we couldn't break the low of last month. Then we've been up all the start of the month. But big rejection at these highs here. This could be kind of a left shoulder area. On the weekly chart, this is a possible left shoulder head, right shoulder. So then we've got a little smaller head and shoulder pattern maybe forming here. That spike up yesterday rejected that weekly high to the left there as well. So are we topping out here? Or are we going to move through? All right, if we don't close above, if we can't close above this bullish candle today, so you can see that's the high. All the closes are happening at or below Friday's close at the moment. So if we can't close above the high of Friday today in this area to maybe signify the idea that we can move through, we may well be dealing with a reversal. On the 4-hour chart, we came in yesterday to fill this imbalance. And if you like imbalances, it actually came in and filled the 1-hour imbalance. So if we look at the 1-hour imbalance, squash it in. We actually came up, well, where did we come up to yesterday? We came up to 28.45. So 28.45 came up to about there. So we came up and filled all this imbalance, came up just short of all these 1-hour tops, and then reverse. So yeah, take a snapshot of that, because if you can understand what I'm talking about, that's where the market topped out on all these 1-hour tops. That's where we came back to yesterday and then held and then sold off. So we're down 40 pips from there at the moment. Are we going to hold and reverse all the way back down? You can see the strong reaction we had from that area. Okay. Now at the moment, 4-hour chart trend is still up, and we've probably had a 62% retracement. So you could be looking to get maybe long for the break higher if you're bullish. Let's drop to 15. Be good if you could get long close to 128, because at the moment you're heading back into resistance right now. So you may have missed the most optimum opportunity to get long. May come back down into this area later in the day. So 79% levels at 127.97 to the figure at 128. That would be the most optimum buy zone at the moment. If we are failing up here for a long-term reversal, then look to the high end of the range. If I can get the right tool, sorry. High end of the range for me is at the 79% level. I'm locking up there. There's a slight 15-minute imbalance in here. So whether or not price will get there today, but that would be the area that I would look at. Could also entertain the 128. 128.27 is that weekly left shoulder, and there's a 62 level there. So I could entertain that area as well, but I would much prefer the 79% up there. Now, whether or not we can get there, because today, with all the daily chart resistance from 128.11 to 128.17 at the moment, and last week's high there, 128.16, you can see today's price action couldn't quite get there. So last week's high is topping intraday price action today. So even last week's high, if we revisit, just there could be where we get an intraday top. So it's all about, if you got this short idea, where do you want to get short in a rally? All right, so those are the zones I would watch. Definitely going to be a game of patience this week with the, waiting for the news, because the volatility of the news, even the Fed talking today, could get that back up to 128.34. We're only, maximum 30 pips away. It looks a long way on this 15-minute chart, but it's not a long way. It's only 30 pips. All right, we can easily be up there today. Now, as well, what you might see, though, depending on how the week starts to run out, maybe into tomorrow, if we trade down today, so I'm just theorizing that we close below 128 today. We break, that's the low yesterday. So if we trade below 127.85 today, then most certainly tomorrow I would look at 12800 to 128.11 as my sell zone for a rally. If we break the low of yesterday today, that may well be confirming the reversal at the top of the range. And then most definitely it does help solidify the idea that we may be looking for a short. All right, pound yen. Keeping on. It's very overextended. For me, it's very difficult to be a buyer up here. Very overextended. A few wicks starting to show here, but we may, just have 1 or 2 days down, and then it can just still hold its form and carry on up. So I would need to see some form of pullback. Perfect world would be a pullback to 201.61, but that's like 500 pips away. So that's not very useful to anybody at the moment. The range of last week, the low was here. Just popped to a new high. So I'm just using the whole of last week's range and up to the new high this week. I could simply monitor the 62 to 79% area and see if we get a nice healthy pullback within the range of last week. Whether or not it's going to offer that, I don't know. Sometimes when I'm looking at a pair, where it's positioned on the chart, I just don't like. It's too high up. So not that I want to get short, but I would need to see it pull back to an area where I'd be happy starting to look for a trade. All right, Aussie yen, very high up. This is more of an area where I'd entertain a short if we could get back below 107.85. 107.85, we're very overextended. Is this 2007 high? Next high is at 109.54. So at the moment, all trends are up. Monthly, weekly, day trends are all up. Structure on the 4-hour chart, we're just starting to have a bit of a headache at last week's high. So, and I did notice you can do all this for all the yen pairs. Aussie yen here. If you just, the day chart, the MACD trend's up at the moment, but the 4-hour is down, maybe a fractionally divergent. All right. So that, is it topping out here to go short? Really? Back to my other charts, just to my 4-hour. It's not able to trade above last week's high at the moment, 108.59. You can see the 4-hour tops are just maybe getting a little bit lower here. We've got higher bottoms and lower tops forming. Which side of the market is going to win out? Are we going to have at least some pullback within the range of last week? So last week's range, that's the lower last week to high. Can we at least pull back down within the range? And then if you're still bullish, be a buyer on a setup lower down the last week's range. Personally, I think if we move below 107.85, then we're probably coming back down the range, but we're not doing that yet. And I can't buy at such high levels. I am noticing from Friday's high, it was yesterday's high to low here. We're obviously coming above the 79% level here, but you can see if I just draw the area we're in, we're not able to exist too long above there. Price is moving above there, it's getting met by sellers to move back down. It's just very choppy. But if you wanted to entertain a short, if you could just wait for, these are two highs from Friday. That this whole area up here, if we revisit back into that area, so it starts at 108.55, just be patient. It's failed up there once, several times there yesterday, twice in that area, 3, 4. That's where all the sellers are at the moment. Are we topping out? So if you can get a tight entry up there, of course, every time you take a trade, there's always risk. It's having a hard time up there at the moment. All right, now just from an intraday buy perspective, this is Friday. We got support. I just want to squash this in. We got support on Friday at 108. Thursday, Wednesday here, we got support at 108. So a good area to look for a buy if you're on the buy side of this pair is down at 108. If we get down there, okay? So if you're looking for a dip, that's the most logical strong support area over the last week for the pair. All right, so that, looking at the boundaries, we could well blow through this top, but come up again and fail, it's telling you he doesn't want to go through at the moment. So if you can get a tight entry to get short, maybe the market does want to start to move to the downside after so many weeks up. Aussie dollar. All right, so that is the December high, which was almost a January high. We kind of topped up there right at the end of December. And that's the current year's low. And you can see we've been 1 or 2 pips short of that level, 67.61. So the big question is this just a very short-term pullback before continuing up? Got highlight up here as well, 68.05, which should potentially be a strong area. We really struggled last year. Whilst we got above 68, we got up to 68.99, okay? It really didn't like, you couldn't spend too much time last year above 68. Those two highs here. So it's worth understanding that, because if we can get back above, or if we get up to 68 this year again, I think that this happened in, I don't know if we've been, all right, this year, the first day of the year trading, we faltered at above 68. Okay, so I would expect 68. I've got 68.05 drawn in. If we can get up there this week on a volatility move, we may see a lot of difficulty at 68. All right, so that's definitely an area to look for a reversal. At the moment, yes, the trend is up. So if we're dealing with a pullback at the moment to continue up, then all these highs, 67.14. We've got some support there on Friday on this candle here at 67. So just moving down to the 4-hour chart, this area here, 67.14 down to last month's high at 67.03. This would be the area that I would entertain support coming in. And I've given you the areas to watch for resistance. If you wanted to construct a short, would be, we've got the 79% level here at 67.61, but my primary area would be up there, 68.05. Now, if we come up and fail once more at 67.61 this week, then I would start to very much focus a failure there, but we might be able to get up to 68.05. we'll have to wait and see. It did put in a quite a nasty reversal candle there, so that could be the signal that we can't go any higher. We will have to monitor. Structure hasn't yet changed on the 4-hour. Excuse me one moment. All right. And what I'm also doing on some of these pairs where I feel like we're topping out, I'm just monitoring my MACD charts. The 4-hour chart here has turned over here, so it's got good angle of separation to the downside. So I'm expecting maybe at least in the short term, this is going to pull back to the buy area that I was discussing. So I think that was 67.14 down to 6700. All right. Due to the fact that this is crossed down. So some of these pairs which are very high up, like the euro dollar 4-hour chart, we've crossed down. So we've got maybe a short-term intra-week top coming in at the moment. And pound dollar 4-hour chart, that's also crossed. So the momentum is just waning a little bit at the highs at the moment. All right. $15-minute chart at the moment intraday. If you're wanting to look for maybe, are we going to have some more downtime at the moment? Struggling at the central pivot, that's at 67.45. That would be one area to watch. But personally, if I just draw a fib across that range, if we're looking for a short-term reversal at the moment, up here at last week's high, 67.52 to the 79% level would be a good area to watch if we get a bit of a volatility spike later when the Fed talks. What happens up there? You can see here there was a bit of a manipulation above last week's high, and then we came right back below. So that's been keenly watched up there at the moment by the sellers. Okay, getting into New Zealand yen, which I don't really like at the moment. It's very high up. It's not really signaling any opportunity to get short at the moment. It's, according to my data, it's above the all-time high just here at 97.75. Monthly, weekly trends are up. Day trends are up, but we're very overextended. And, for me, I'm not getting a signal to go short at the moment, but this would be maybe an area of support down here to watch if we pull back at 97.92 to 97.75. Okay, 97.75, let me just double check, is that monthly area, I think. Sorry, up here, 97.75, yeah. All right, so that should be support and a pullback in the first instance. Now, if price was to break below there, that wouldn't be good for the buyers at all. And then we could be reversing back down to this area of support. But at the moment, yeah, we've had one negative day after lots of positive days. Now, that is a reversal candle yesterday. If you're game enough and you think we're so high up here and it's just time to short, well, we've broken the rejection candle. You sell your stops above the high, and you're trading that one rejection candle as the trigger to do a reversal. We do have the interest rate decision tomorrow from the New Zealand central bank, so probably on the New Zealand cross, it's not the best idea just to take a position. Could wait to see what happens tomorrow. Tomorrow, if we spike above or up to last week's high and then hold, that could be a great area to look for a short, at least back down to support. And of course, if you spike it down into this area tomorrow and it starts to hold, great area to look for a long. New Zealand dollar. Conversely, it actually failed at a beautiful level here yesterday. 62% of the monthly range. So this is the monthly candle high to low on my daily chart. Now, structurally, if we go to the weekly chart, we have the potential of a weekly double top running out. I've been short for a number of weeks at 61.39. I'm looking potentially for this to, here's your double top. Looking for this to move down to the target at 54.85. That's the height of the pattern projected below. In fact, tomorrow I'm going to go through a lesson on double tops and bottoms. So the height of the pattern projected below comes down here, and that's, you know, coinciding just below the 22 low. So are we going to see that long-term move down? We'll have to wait and see. So what we're seeing at the moment is last month's range, we've moved up 62%. In fact, we've just come back up to 79% of this range and of last month's range, we're about a pip short of the 62 level. Just going to move to the 4-hour chart. Right, pip short of the 62. What I was watching yesterday is last week's high stopped at this resistance area here, and then yesterday it traded through and took out the stops. So look at that as a area of liquidity where retail stops are sitting. So they all got triggered, and then the market couldn't hold above there after that because the only buyers are the retailers. And then we've sunk back down. So at the moment, I would draw a fib across that range, keep dragging it down if price moves down. And wherever the low comes in, you know, do we get a rally back up tomorrow after the interest rate decision? Do we come up to the 79% level, 61.44? Do we come back up to entertain this area for failure tomorrow? They may not come up there, but logically, if we're topping out here for the next move down, I want to sell a rally. I don't want to sell the bottom of the first little run down. Okay, so a few ideas there for you, depending on what the news brings tomorrow. All right, dollar Canadian has moved down to the bottom of its range, bottom of the monthly range. So it's a very common theme that we've pairs to the US dollar moved up to the tops of their ranges or to the 79% areas in any event. On dollar Canadian, we've moved all the way down to the bottom of last month's range. So that's the bottom of last month. We're actually trading 1 or 2 pips below. So while we theoretically at the bottom of the range, we put a nice reversal in Friday. It'd be nice if we could pull back to support, which is this area here, 136.13 for a buy opportunity, or to this 136.19 low just here to trade back up to, you know, resistance up here, 137.34 to 43. So on the 4-hour chart, whilst it looks like it's putting maybe a higher bottom in here, it could at some point this week. If it takes out this top, then what I'm saying now doesn't stand, but we haven't taken that top yet. So whilst that top holds, I would look to 136, 12, 13 here, 79% level. Look to that area. Or this area of support here at 17. So that area there would look for, do we get some kind of volatility spike down to then, are we moving up? Are we moving back up? That's the high last month. Are we moving all the way back up? Now, of course, support can break. If this breaks, of course, pairs to the US dollar are putting in fresh highs this week again, if it breaks. So now all the pairs are asking the question, pairs versus the US dollar, are we topping out? And this dollar CAD is asking the question, are we putting in the bottom? All right, dollar franc, which seems to be operating inversely to the other pairs, but in any event, today charts, let's look at the weekly chart. Weekly chart is really structurally down. According to last week, we rejected this area, 89.91. So does that mean we're now coming down to put in a further low? This week at the moment, today we are hitting and holding. Hasn't quite traded at 89.91, so that is the area of resistance to try and trade down from. And it doesn't look like you've already missed the best area to trade from, from my perspective. If I wanted to trade this pair, I would be looking up here. All right, 89.91 would be ideal, or as close as I could get a short up there, stop above. So whether or not this will have any news volatility come back up into that zone this week, you'll have to watch. Other than that, then you're going to have to construct something else. Could theoretically, if you want to get tight intraday, you could be drawing a small range here, looking for a rally for the next little intraday lower top to form. All right, dollar yen. Like all the yen pairs, it's very high up. This is the area where I said last week, watch for support. So it's the monthly top at 160.33 from back in time. This back in 1988. We've moved above it. It's starting to act as support at the moment. All trends are up. Monthly, weekly, day trends are up. Okay. So we traded 2 days into that area. We're kind of popping out of that area. All right. So we moved above here. These two candles popped in and moved out. These two candles have popped in and moved back out. So at the moment, that is support. Whether the market will be used, if you haven't already traded here to get long, whether the market can come back into this area once more, offer you the opportunity, you'll have to watch. I don't like it being so high, so I can't really be a buyer. But this would be the buy zone if you want to be a buyer. So we proved it 4 times. If we were to break that area, you would then start to watch the area to be resistance for a downside move. Well, as to whether that's going to come or not, I don't know. But right now, let's go to the 15-minute. %79 level of that range. In fact, we've got a slightly higher top just there. Is at 160.44. So really, if we were to dip down today, 160.44 down to 160.33 would be the area that I would look for the buy side. Central pivot's holding the market at the moment, so we may not be able to get down there because it looks like support's coming in at that level at the moment. So if it revisited the central pivot point at 160.74 today, yes, that could hold once more. So that would be a good area to watch. But I always like to try to be trading as close as I can to support. So that's down in this zone here. So whether the price can get down there or not, I say probably not, because if I look at this range over here, came down into the 62.79% zone here. So it's maybe this is a higher bottom. Then it's going to go up and then put in another higher bottom and not get down to that level. But with the news this week, it is most definitely worth watching for a spike down in volatility, and that's the area to watch. Okay. All right, I'll just finish on gold. Now, it's just holding its uptrend. These are areas I was watching before from the previous week. All right, so the weekly trend is up. High bottom, not the high bottom. Starting to maybe want to deal or hold above a daily area of what was resistance in here. Okay. Still rather range bound. I would, if I don't trade gold, but if I wanted to, I would monitor this range and look for a deep pullback. We certainly have data coming out this week that can offer that deep pullback, whether or not it would come. So I would look down here at the 23.14 area. You've got last week's low there at 23.18 as well. This buy zone here. What would happen down there if price was to pull back down into, you can see all the consolidation we've been having here, here, here. All right. All this area, this is the area of consolidation here. Is there. If I put a line in the middle of that, which is about there, well, it's right where I'm saying support is, over here. It's in the middle of all that consolidation. All right, so I would be focusing on that area. Does price pull back? No. Still bullish golds, but don't want to buy at the top of its run. Can it have a nice corrective move? That's the day chart. Higher bottom, higher top at the moment. Can it come down, put in another higher bottom down here at a logical area of consolidation here forming to move up? Does it come back down to test the bottoms of those areas of support there? All right, so that's my thoughts on gold at the moment. All right, other than that, it's going to be a game of patience this week with the US data coming out this week. Plenty to drive the market, but which way is it going to get driven? That's the problem. So having a clear idea where the outer skirts of the ranges are, and then whichever way price gets driven, you've got a game plan to trade up or down from the outskirts if price gets to the outskirts. Or I'll leave it at that. If you want to join me this week for another webinar, head over to the webinar page. There's the link at the top. Tomorrow I'm going to be going through double tops and bottoms, 7 p.m. City time, and more analysis on Thursday. If you want to join me, just head over to the link, register your interest, and I look forward to seeing you then. Okay, everybody. Thanks, everybody. Have a great trading week.